Stanley Druckenmiller has often been considered one of the best investors and traders of all time, but recent filings show that he sold Alphabet, Amazon, and Broadcom, still holding on to Nvidia during what has been an epic rally. So what gives? Well, as it turns out, markets have been really playing the book of super bullishness. But with someone like Stanley going negative, should we be looking a little bit closer at this current rally? The 20 moving average, as we expected, found the bounce. Now we reach back to the 5,000 level, which really holds so many of the possibilities of bears. Today we'll go through Nvidia approaching the 750 core wall, the VIX getting crushed down after failing to break and close above 16, and Bitcoin's rise all the way to our next target profit level. Join us as we cover stocks, commodities, and cryptos together right now. Well, welcome back everyone to The Daily Show. We're looking at macro, lead indicators, and the hottest charts. And we've got some amazing synergies with markets coming forward that could be occurring all over the next week. First up, let's talk about one of the closest correlations that we've seen in some time. And you've probably heard a lot about the S&P 500 being converted or talked about with 1929. Well, it turns out the correlation with the market right now is around 0.94. And Nathaniel Gilbert actually did this for Bloomberg. And you can see here that this is a scary correlation, to say the least. Now, we are coming into a sentiment period where technically we see seasonality. So really, it's going to be what happens in March and April that define whether we're actually following a very similar path. It looks super scary on the surface. I just thought I'd bring it up because, of course, it is an interesting correlation. 0.94 is no joke. So where are we right now? Well, we're at a point where we tend to see a movement to the downside. Usually the middle of February, around OPEX week or the biggest options expiration, tends to lead into potential weakness into March. And we did see potentially the start of that with the inflation figures. You can see even presidential years, when we have a sitting president running, we do tend to get a nice rally at the start. And this is exactly where markets start to flail and have problems, usually returning back somewhere to where we started at the start of the year, which you'll notice is actually a big demand zone, and then rallying throughout with sometimes some weakness coming back in September and October, often considered the worst months of the year on historical averages. So will we see it? Well, this Friday will be one to watch. Of course, we've talked about this for a while. Friday options expiration, only 40% of the time usually bullish. Today we'll be looking at whether we are going to get a negative Friday, because that hasn't happened in quite some time. But for longer term bulls, are you still cheering? Well, the answer is probably yes. We hit 5,000, we took the level, and while we're starting to find a little bit of a shake-up in markets, we know that historically when we've hit 1,000 level and closed above it, we usually have a very good 6-month return. So whatever the pullback could be, it may be short-lived, and I think that's very important. What about Bank of America's expectations? I thought this was a really interesting one because, of course, in 2022, all we could talk about was recession. Now all we can talk about is how great the growth expectations are on the next couple of years. And recession has now fallen back down to almost near where we tend to sit. So what should we really be worried about here? Well, as it turns out, there are a few things that we should be looking at. This is a great one here from Wayne, which shows that if we move into March and then May and we get a sell-off, that historically, based on everything we've seen so far, we would be looking at a very positive time. In fact, we'd be looking at a 17-0 track record. So what happens in February will be important, but at this point, if it is going to be a sell-off, again, the bulls, the stats are in your favor based on these alone. Pause it there if you want to have a check out of Wayne's great stats. So the S&P 500 option implied probabilities, this is another one that's been posted by Morgan Stanley. And what it shows you here is that the market's starting to price in a higher chance of SPX being at over 10% than really showing anything to do with negative 10%. You can see here that we have only 10% of the time that Morgan Stanley believe we're going to move over 10% to the downside. Now, you could say that's peak kind of complacency. And a lot of the times when you get these types of events and you get these low periods, you can sometimes see volatility come straight back in afterwards. A notable one would be around this period of time, which was 2018. And if you remember, we went into a trade kind of war at that period, which caused some massive movements in the markets during that time, specifically for big tech stocks. So what about the CTAs? We've talked about them switching it up. We do have new updated data, and I've got to say they barely dropped, but they did drop. we're back to, and this is very important, we're back to the July highs, which really changed the market sentiment back in 2023. So we're all in. CTAs are all in. They are absolutely smashed into the NASDAQ, and we already know it's the most crowded trade. We saw the first signs of a little pullback. Not anything to write home about, but make sure to stay tuned on this channel as we'll update you. Another couple of things here, of course, we see Friday's performance. You can see here that generally it's been positive since October. That may be about to change this week. And in general, if you are a bull, remember, accelerating growth is the story everyone's talking about because it's generally happening. But we do need to remember that what the Fed's doing does have a lagging effect. So there's no doubt that they are trying to slow the economy. So this could be something that changes throughout the year. Look towards growth, and obviously each earnings period will be very important. Also, the speed at which the Fed cuts. In cycles where they slowly cut, good thing for markets. In cycles where they freak out and panic and cut really quickly, that's usually a very bad sign. That means that there needs to be a lot of stimulus and something is totally broken. So remember, the speed of the cut in the future will also be important. We've been talking about the Russell 2K versus the S&P 500, a great rebound considering how bad it did on the previous session with inflation. But do remember, if we do see yields continuing to drop, there is a pretty strong correlation with the Russell 2000 and yields. We also can see here that in terms of sectors, real estate's been pretty much one of the best sectors to be in, actually, outside of maybe technology and AI. But you can see here that actually it's super bearish. So a lot of people have been super negative on it, but it just keeps making higher highs and higher highs. But Buffett did just sell out, so maybe it is near the top now. Small caps exhibiting that ratio with the 10-year yield. Remember, this is a big one. Keep a lookout in the future for breakups and breakdowns with yield. And it's over on our X account, so you can follow along with that. But also, the economists out there are expecting, if we're going to get any growth, that it's really not going to be in the Mag 7 anymore because the expectations are so high on those. And it may be actually in the other 493 stocks. I'd say 494 because let's be real, Tesla hasn't really come to the party. Breadth has been bad, but that's starting to change. We've seen some pickups in, of course, some of the smaller stocks recently. And RSP, which is the equal weighted market, did make a new high. So watch that one in particular. That's a chart we'll be looking at quite a lot over the next couple of months. What about recession concepts here? Well, funnily enough, when we tend to see recessions happen is when people don't expect them. So 1 year after vol ratio hits lows, which we're getting into that period right now, is actually usually when we see a recession or we see something happen. That would actually be in line with the Fed. And remember, one of the good reads is that if we have a rising unemployment market and markets actually end up showing that there's weakness across the board, that usually marks around 6 months from a recession. And usually you'll see the Fed doing some big rate cuts around that period. So remember, rate cuts are not the goodness of their heart. Instead, it is because something is wrong. When we're talking about the VIX, do remember a close above 15.5, 16 is going to be very important. If we do get a big daily or weekly close above that, it opens the floodgates to a big gamma switch. And if we get a gamma switch, then that obviously means that the biggest hedges out there have to start buying in. And that's going to be a big problem. Obviously, that's probably going to cause a bit of a shock crash or shock fall in markets. And I would expect all of this to be occurring around the 48.80 to 49.20 zone, which is also smack bang in the middle of the 20 daily moving average. And some of the reasons why that is because that's where we move from a positive gamma situation, which is definitely positive for markets. There's no doubt that it is a good thing for markets, to a negative gamma situation. More on that coming up. But do remember to watch out specifically for these 48 kind of 80 to 90 zone. And if we do end up closing below there, I think it's a pretty big deal on markets and we'll need to be paying attention to it. Now, we haven't really seen a massive pullback yet from the S&P 500 as it approached 5K. Do remember in the past, we just got close. We saw a pullback. In 3,000, we saw multiple pullbacks. In 2,000, we saw a pullback just before and then a sideways, effectively what we call a pullback in time during this period. So some interesting stuff coming up. The 1,000 level is certainly where everyone's very excited. Now, are there opportunities outside of the US stocks? Everyone's bag sixing. Maybe it's getting a little bit too bullish there. And if you're riding the trends, very good. But if you're not in the trends, you can easily feel some FOMO. Are there opportunities in other markets? Well, it seems to be stacking up that really the peak of, let's say, everyone freaking out about China is here. First up, we've had some thrust moves, which is usually a good start. We know about this issue, which is, of course, China's aging population. This will eventually be one of the biggest issues around the world, really. Specifically, though, China will be doing very badly. Market cap got overtaken by a couple of stocks the other day compared to the entire cap of course, the Chinese stock market. And we know that we're in the Lunar New Year, which tends to be kind of a flatlining to positive correlation over the next 20 days. So that's all looking okay. But do we have some other stuff? Well, as it turns out, we have some defined outcome ETFs. Now, we tend to see these kind of appear near the bottoming of markets. You can see on the left-hand side, we've got a Goldman Sachs Asset Management launches new defined outcome ETF back in 23. That was the bottom of the market. And then we actually saw a huge rally from that point. It's just another interesting stat. And of course, Crane Shares launching the defined outcome ETF which is these codes here, happening right when we were potentially capitulating in the market, something that I think is very interesting. We've also seen basically the central bankers of China coming in, the government coming in to do all the playbook reasons, short of buying way more stock themselves, which could be the last resort for them, and that is to replace the main regulator, generally being a positive correlation in previous terms. We've talked about it a fair bit. Let's go over to earnings. Of course, we still have a lot of earnings coming our way. As we mentioned, Hood did pretty good, hit that take profit target level and managed to obviously hold around that zone. Crocs now coming before the open. John Deere, another one that a lot of you like. Then we've got Roku and DraftKings coming in after that. So some interesting stuff going on in the markets right now. And do remember, Roku is going to be wild. It's expected to be plus minus 14%. So you've got to be careful because the options market's not lying to you here. They're expecting some big, wide moves, whether it be bullish or bearish, who knows? But yeah, if you're not prepared for it, then you don't have risk management, and that can be one of the worst things as a trader or an investor out there. I'm sure we've all got our stories. In fact, if you have a story you want to share with everybody out there, put it in the comments down below to show other people that firstly, they're not alone. I think we'll do some story time in the future on some of these, and we'll focus on them because there's really great learnings in making mistakes. One of the ones I mentioned the other day was the first time I ever traded a silver contract. I didn't realize it was a different size. You might say, Tom, are you stupid? Well, that was back in 2007. And I do remember I pressed what I thought was the same size as a gold contract, and it was massive. Let's just say it cost me about $600 in brokerage, and it was not a great time. But you'll learn from those things. Hopefully you never make it again. I never made that mistake again any time into the future on any instrument, because I always remembered this feeling of dejection I got when I pressed it and there was $600 down and I was like, oh, that is the worst. Anyway, that's just a story there. If you enjoy that type of stuff, let me know in the comments. So let's go over here to some interesting stuff. Nvidia obviously still getting a lot of interest. Calls getting out of control. A lot of people buying it. Short squeezes on that particular stock. We've also seen ARM obviously get, kind of hit around. A lot of people trying to buy into this as a squeeze. I expect it to be a very volatile stock moving forward over the next coming weeks. And you can see the moves are getting fierce, which usually shows you that you're at a market where there is probably a lot of questions being made whether there's too much FOMO in it. 56% calls, 45 million options in general. Overall, only 44% puts. So again, still in that call aspect, and retail making up 28% of the moves. So a lot of unusual activity, some big earnings coming out, and in general, the options market is just getting bigger and bigger and bigger, which is kind of cool, and I like options so much. So it eventually will cause some problems though, because as we know, everybody's doing the put rights as well. So if that ends up getting hit and it becomes profitable to hit the put rights, we'll be talking about that soon, because that is going to be a very wild day if it ends up occurring. What about clean energy and TAN? They came back very strongly, coming back from pretty much what they gave up in the previous session. Semiconductors really powered home, which was an interesting one. And we saw defensives in general, utilities, staples, healthcare, all of those kind of struggling around. So they weren't doing too well. Now let's get onto the charts. Nothing in terms of change on central bank liquidity, so nothing to update there. We saw a pullback in yields, which is probably to be expected, although I still think that yields will make their way towards 4.7. We still have OPEX. We still have PPI and other information coming out this week we'll talk about later on. So make sure to be watching the 4.5-ish zone on US 10-year and obviously the 2-year on the other side. TLT holding its own. One thing that could be interesting here is if we do see yields super drop for whatever reason and we get like kind of a movement up here, this might be considered an island reversal. Now, because it's underneath where a lot of people will have had stop losses because it's the obvious place for them to do so, it could be an interesting momentum switch trade. So something on treasuries. I kind of still expect, though, yields to maybe go up a little bit more and therefore treasuries to come down. Home builders held really well. So home builders, obviously, maybe Warren Buffett's getting out of them a little bit, but we are seeing them hold, and transportations are still within the range. You can see the downward trend or the trend line itself holding up as well. US dollar remains pretty bullish. I think this one has those characteristics that could set it towards that 105.80. And that usually would mean that we're going to see, again, yields potentially go up. And also, if the dollar index keeps strengthening, it does increase the strength of the bear case. I think if you're going to be bearish in markets, though, right now, options are your only bet. And the reason why is because I think you'll get really hit up from the aspect of CFDs or futures trades in the current environment that we're in. Because remember, you are making a prediction, but we will talk about the key levels soon. Dollar index held the 20 moving average, which you can see here has been held a few times. It went the opposite direction first during the news to probably grab liquidity, and then it rallied straight back up. So this now becomes what a lot of people will probably call an inverse head and shoulders. I'm not convinced it's going all that way, but I do think 105.80 could be pretty good. And we have been bullish on the dollar for quite some time, ever since down here. So it's been chugging along, maybe not the best thing in the world, but certainly quite strong. Now, oil failed to breach past that 78.50 and close. Now, if it got above 78, 78.50 and close above there, big deal. Watch reaction here for a reason. If that still happens, oil is probably predicting that yields are going up because they often are correlated. So, and the dollar also would be blitzing. So do remember, if we randomly see this one and set an alert for it, that is not a good sign for markets. So, of course, if you're a bull, you're happy with it being rejected. If you're a bear, you want that thing through that zone really quickly, ideally. Some other opportunities in the markets, RK coming back really strong, 5.47. It just shows you that these particular stocks, we mentioned Hood the other day, and that one, of course, rallied in. That was a pretty good setup. There are quite a lot of interesting setups. And even ARK, when you look at it, looks like a doubling bottom pattern. Obviously came back to the neckline of that, and then it's rallied up. There is a bit of room to run for these stocks. And you've got to remember, we're not anywhere near the valuations of the crazy ones that we saw a few years ago. So interesting base, good weekly close for it. So far, so strong. Obviously, it's holding some stocks that are doing earnings announcements this week, though. So we'll see how it goes. What about the other markets? Well, let's have a look through here to Tesla. Now, Tesla, a lot of people are going to be seeing this as, again, an inverse head and shoulders. Very important level coming up. 195 breach. It's probably going to bring the bulls, and that will be breaching a 20 moving average on the daily as well. And if you're like fortune favoring the brave, I guess if you like Tesla a lot, the 181 does make some sense. As we know, it's one of the most traded zones, and obviously we've had that on the charts for a while. It's possible that we get a 163 return point. If we do, that's a huge bull zone where you'd probably expect bigger accumulators to try for it. But we do have some catalysts here moving forward for the bull side. And obviously, we have the most traded zone. So maybe a little bit of positivity coming back for Tesla. But yeah, still too early to tell whether it's going to breach out. TAN, similar to RK, we have kind of like a small change of trend here towards the upside. One of the most hated sectors, along with clean energy, finally started to rally last week, which we talked about. It's almost back to those new highs again, had a really good 24 hours. It really just needs yields not to go up. If yields go up, I expect TAN to suffer. But to put it in perspective, if you think about where it is, it's certainly a long way from how high it was at one point. And obviously, if we get through things like the weekly 20 and stuff, it could be improving. Nvidia just keeps rallying. There is no sign of weakness in this stock yet. And I just want to reiterate, you are absolutely predicting if you're going against this. So many people have messaged me saying, Tom, I'm trying to short Nvidia. And I don't really know why. I understand it's a ripoff in many ways, but really it's actually, I was wrong the other day when I said it was trading at 1 SD above. It's actually trading right in line with normal forward PE. Now, that doesn't mean that the expectations aren't fierce. They are fierce, but they've obviously got some room for growth. Nvidia remains one of my, pretty much my top two stocks, which it always has been, Microsoft and Nvidia. And I don't know if it's a great price. I probably wouldn't invest myself around this price here. I'm pretty patient on it. However, the trend's up. It's holding the 2-hour 20 moving average. So some big stuff happening there. Let's move over to the Hang Seng Index. So some good stuff coming out of China. What we call like a tweezer pattern is starting to appear here. Obviously no momentum shifts towards the upside yet. That would need to hit that alert at 16,500. But that, along with what we've been seeing on things like K-Web and CQQQ, there are some signs of life in a market that has been horrendous for quite some time. And it is already up off the bottom around 10%. So, it's rivaling, I guess you would say, the major indices at this stage over the last month. Let's now talk about the Aussie 200. Big wick rejection. Actually, quite a strong little bit of a setup. And one thing I wanted to talk about with that was copper. So I saw that copper, while it's down in these lows, you'll obviously see I have a yellow line there. When we look at the structure on the smaller time frames, copper's trying to make a resurgence. Now, it's right at that level right now, which a day trader might be interested in for whatever reason. And it'd be interesting to see whether copper, this is one that also has a large contract, guys, so you gotta be careful. But copper is one of those things that if it does breach through 375, it's kind of showing that it's changing trend. And I think some people, obviously, there's potential that it's at a bit of a demand or support zone right now. And that's decent for the Australian market as we are energy focused. Of course, you'd want to see oil break out, and also minerals and metals focused. Because, of course, I'm from Australia. I do understand that. Shout out to the Australian viewers out there. US 2K, what's going on there? Well, we got a nice bounce. Not making up everything it lost due to, some banks and stuff not really getting through. But we do have a decent structure towards the bull side still. The weekly was pretty strong. The hold so far has been strong. You do need to kind of err on the side of bullishness at this stage, and unless yields keep going up, because if yields keep going up, well, that's going to affect it heavily. NASDAQ, now, this is an interesting one. We've made it back to the 61.8 fib, often considered a big turning point. Now, the NASDAQ never really got through what we already know is a big zone, 17.5, the daily moving average, the 21, and of course, it found super bulls straight away. If bears are going to be there, it's this little supply that's going to do it. And it's really in this zone between around 17,800 to 17,900. So the next 100 points, very important for the NAS. And if we go to the QQQs, just so you can see here, we still have a gap fill that's sitting around 435 on the Qs. So that's still holding at the point where, we could easily fill there, come down and get the other gap. And then if we get underneath the 20, swing traders will be all over that type of thing. That's going to be a big deal. You can see here the 20 has been generally pretty consistent the last 3 times, but over here, up until this candle changed the game for the Qs. We were actually looking kind of negative. One that hasn't failed though has been the S&P, a very consistent 20 moving average hit especially on the futures, where we've seen constant bouncing off that. Again, 50 or 5,020 is kind of where we have that gap fill. And again, we're sitting at 5,000 at the time of this recording. So what I've done is I put a watch reaction at around 5,000, which was where we are. And between here and 5,020, similar to the NASDAQ, if the bears are going to resurge and try to get this thing down after the inflation, this is going to be a very interesting point for them. We haven't got enough structure yet because we just reached it, but this is what we kind of expected in the last video. We thought we'd get back to this zone. If the bears come out, it's probably going to be around here. Are you a bull or a bear right now? Let us know in the comments. Speaking of bulls anyway, Bitcoin is surging and it's gotten past my level. I was real. I thought 51K, 50,900 was a sweet take profit zone. And I still stick with that. I think it's pretty sweet. Now, the market is surging pretty hard and it's kind of making the possibility of even higher levels. Now, I don't know if we actually have another really key zone. Of course, you just got psychologicals. If I'm looking at structure back, you're talking like super high. Possibly it's even 57K. To me, it's just in a running trend. It will show some sign eventually of a flash dump, and I'd be careful around there, but it's certainly on the hype train for now. So 52K, this is a big deal. It's already breached through and the trend is up for now. I wouldn't fight against it, but I would be watching the structural formation around here, because if it turns negative, then this is an area where I was looking at potentially sells resurging back into the markets. Nothing yet at this stage. What about for the big news ahead? Well, of course, we have core retail sales, which may move the markets quite a lot. That's coming out 8:30 a.m. just before the market opens. And then we have PPI and prelim UOM consumer sentiment. And all of this is on Friday. So some big stuff coming through, guys. And I think we need to be on top of the markets over the next couple of weeks. Remember, Nvidia earnings next week as well could be a massive, massive catalyst. The strongest stock right now. If that loses sentiment, can you imagine? It's probably not going to, but if it does, it's going to be wild. Is it a buy the rumor, sell the fact? Who knows? Subscribe, smash the like button. We'll see you in the next one. Bye for now.